Hi, this is Brandon Lau with Choice Homes Hawaii News, and today we'll be talking about double dips and Hawaii real estate. Now, as we all know, things don't look very good in our U.S. economic landscape. All the major indices are down. We have concerns over the looming European debt crisis. Our anticipated economic growth is going to be lower than expected, and also unemployment is still at high levels of 9%, with lowering coming much slower than expected. If there's any silver lining to all of this, is that because the private sector isn't expanding as much, we have lower gas prices. Interest rates will probably be low for the next couple of years. And also there are some larger companies such as GM, Johnson & Johnson, Oracle, or Dell, who are flush with cash and have great balance sheets, but are just not spending to hire and expand at the moment. Now, how does that compare to our local economy? Well, although the unemployment rate nationally is at 9.1%, the Oahu unemployment rate is only at 4.9%. And that's a far cry better than we're doing on a national level. Also, visitor counts have increased, along with length of stays, and the total expenditures year-to-date has increased 16.1% compared to the same time last year. Personal income has increased. In the first quarter of 2011, it was just over 4%, with 3.8% through 2011 and 3.9% through 2012, not adjusting for inflation. Now, how does the possible double dip in the economic landscape of the U.S., how would that affect our local real estate market, even though our local economy looks like it's doing pretty well? Well, we see here in a chart of Oahu median single-family home prices that dates between 2003 and 2011, that there was a big increase through the early 2000s, which peaked in 06 and 07. Now, of course, we had a subprime mortgage meltdown. Prices has since fallen, and there was somewhat of a bottoming out in the market in the spring of 09 in terms of activity, and therefore you had a slight increase in prices when you had an increase in activity about a year and a half after that. Now, the question is, we see another decline in prices at the tail end of their chart, and is this a matter of a double dip, or is it a matter of what Paul Brubaker would say is oscillatory convergence? Now, what oscillatory convergence is when you have a limited pool of investors having to absorb an increase in inventory in a short period of time. And that creates this whole wobbly effect. But at some point in time, the price trends would then come to an equilibrium after the shocks have somewhat subsided. And so that's the theory that Paul Brubaker is putting forth, that we may be experiencing in home prices. Now, the same phenomenon could be exampled in three other markets. You have the LA market, the San Diego, and San Francisco markets, which all exhibit the same type of spring back occurrence and then a slight tapering off afterwards. Again, is that double dip, or is that a matter of oscillatory convergence? Now, here we have on the bottom Las Vegas, which unfortunately didn't have that same bounce back. Probably is due to the high levels of surplus inventory that they still have. Now, one thing to look at in terms of Hawaii economic indicators and real estate indicators is how much inventory we have left. And that'll give us a clue on what the future holds for Hawaii's real estate market. Well, inventory levels for both single-family and condominiums are similar to where they were at the high time of the market in 2005. Now, that's a very positive sign. Not to mention the days on market, although we had an increase, have since subsided and have evened out to about 30 to 40 days on market, which is not bad. Pricing for both single-family and condos has come down a bit after the high of the market, but it seems to have plateaued out. And as we know, prices tend to follow a more staircase-like pattern, so that should be expected. Now, the one interesting chart is this historical housing affordability index. Now, what this index does is it takes into account home prices, median household income, and where interest rates are. And of course, the lower the interest rates, the more affordable the housing. So you see here that although affordability was down around 2008 and 2009, it has since increased to the point where for both condos and single families, the affordability index is around 2004 levels. Again, this is when the market was red hot. And if we look at where interest rates are right now, believe it or not, they're right at about 4%. Hard to believe at one time they're around 18% in the 1980s. So when we think and consider of how prices are reacting to the current markets, it might be a good idea to look at the strength that these indicators are pointing out. We have low inventory. We have pretty good buyer demand spurred on by interest rates. And all things considered, we could be meeting at what we call an equilibrium in our pricing. One last thing to point out is what we call a trajectory of the market. Now again, I refer back to the research of Paul Brubaker of TZ Economics. And he put here a chart of 50 years of our historical single-family median prices. And basically, he says here that there's been about 6 cycles in the market that follows these lines of trajectory. Now, where we are right now, it appears to be is on the lower end of a cycle. So, assuming that history eventually repeats itself, we may be in for a nice surprise in the coming years as we turn upward in pricing. So in a nutshell, we may see signs of a double-dip recession coming soon. Now, is that going to mean that our Hawaii economy is doomed as well? Maybe not, because it seems that our economy is somewhat improving. Also, real estate prices are looking like they're reaching an equilibrium, and as long as the mortgage rates stay low, housing will continue to be affordable. So as they say, lucky you live Hawaii. Now, for more information on a local real estate market, please visit our website at www.choicehomeshawaii.com or visit us on our Facebook page at facebook.com/CHHawaii. Until next time, this is Brandon Lau with Choice Homes Hawaii News. Aloha.